Hello and welcome to Philippine Market Wrap. This podcast is intended to generate information and market commentary only. It does not constitute financial advice or recommendation to buy or sell any financial instrument. Please make your own investment decisions. On April 24th, 2026, the Philippine stock market closed lower. The PSEi ended at 5,943.49 points, down 0.67%. For the week as a whole, the market remains under pressure. Trading value came in at around 5.5 billion pesos, which is relatively subdued. Decliners outnumbers advancers 110 to 80. Across sectors, the market was broadly negative. Financial led the decline, down 1.63%. Property, mining and oil, and holding firms also moved lower. Only the industrial sector posted a slight gain. Overall, the tone of the market was clearly risk-off. The primary driver this week was a shift in monetary policy. The Bangko Sentral in the Philippines raised its policy rate by 25 basis points, bringing it to 4.5%. This effectively signals a move away from the previously easing cycle. The reason is inflation. Inflation is now projected at 6.3% for 2026, well above the central bank's target range of 2 to 4%. While rate hikes are aimed at controlling inflation and supporting the currency, they also come to the trade-offs. Higher borrowing costs, slower economic activity, and pressure on equity valuations. This week, the market focused more on these downside risks. External conditions added to further pressure. Ongoing tensions in the Middle East pushed oil price higher, with WTI approaching the $100 level. For the Philippines, this matters significantly. The country relies heavily on imported energy, which means higher oil price translates into higher inflation, wider trade deficit, and pressure on the currency. This creates a feedback loop that weighs on both economy and equity market. One notable feature this week was the weakness of banking stocks. At first glance, higher interest rates should benefit banks. However, markets are looking beyond the margins. Rising rates tend to reduce loan demand, increase repayment burdens, and elevate credit risk. As a result, investors are pricing in a potential risk in non-performing loans. In this context, risk consideration outweigh any benefit from wider interest margins. The peso weakened over the week. It closed at around 60.7 per US dollar. This is particularly notable because it happened despite the rate hike. Under normal conditions, higher interest rate would support the currency. In this case, the opposite occurred. This suggests that external forces, especially oil price and global risk sentiment, are dominating domestic monetary policy. Investor behavior this week reflects caution. Trading volumes were low, foreign investors were net sellers, and the market breadth was negative. This is characteristic of the risk-off environment. Rather than aggressive selling, the market is seeking a lack of fresh inflow. From a technical perspective, the PSEi has fallen below the 6,000 level. Near-term resistance is around 6,100. Support is in the 5,800 to 5,900 range. With weak volume and no strong trend, the market appears to be consideration phase. In the short term, the market is likely to remain range-bound with a negative bias. Two factors will be critical going forward: the direction of the oil price and whether inflation begins to peak. If either stabilize, the market may find support. If both continue worsen, further downside cannot be ruled out. This week's decline in PSEi was not driven a single factor. It reflects a combination of monetary tightening, rising inflation, and external shocks. Importantly, these pressures have not yet fully dissipated. The market remains in the cautious phase, with investors waiting in the clearer signals. That is it for this week's Philippine market wrap. See you next week. Salamat kayo. Amping.